Question number 6. Sony Mat Sawmill manufactures two lumber products from a joint milling process. The two products developed are MSB and CBL, that is mine support braces and unseasoned commercial building lumber. The standard production run incurs a joint cost of $3 lakh, results in 60,000 units of MSB and 90,000 units of CBL. So it is similar to the previous question till this part. On top of that, they have given few more additional informations. So from the joint process, we get two products, MSB and CBL. 60,000 units of MSB is produced from the joint process and 90,000 units of CBL is produced from the joint process. Each unit of MSB can be sold at a price of $2 per unit. $2 per unit. And each unit of CBL can be sold at a price of $4 per unit. Assume commercial building lumber is not marketable at split off, which means, see, what is the split off point? Split off point is the point where the joint products are separated, right? So CBL cannot be sold at the split off point. So it needs to be processed further. So here CBL is not marketable at the split off point, but must be further planned and sized at a cost of $2 lakh per production run. During this process, 10,000 units are unavoidably lost. This is a normal loss. These spoiled units have no discernible value, which means CBL has to be processed further and the cost of further process is $2 lakh per production run. During the further process, we have lost 10,000 units of CBL. So before we had 90,000 units. Out of this, 10,000 units are lost. So we will get only 80,000 units of CBL. And the cost of further process is $2 lakh. The MSB product, the mine support braces, before that, the remaining units of CBL lumber are saleable at $10 per unit. So here we got 80,000 units, right? These 80,000 units can be sold at a price of $10 per unit. Now, MSB, although saleable immediately at the split off point, are coated with a tar-like preservative that costs $1 lakh per production run. The braces are then sold for $5 per unit, which means the MSB product can be sold at the split off point, but still we are processing it further. We are processing it further and we are incurring a cost of $1 lakh for the further process, and no units are lost in the further process. So still we will get 60,000 units of MSB, and these 60,000 units can be sold at a price of $5 per unit. So that is what they have given over here. Requirement of the question is, using net realizable value NRV basis, the completed cost assigned to each unit of lumber would be how much? So here they are not asking, we have to understand two things. They are not asking the allocation of joint cost. They are not asking us to calculate how many rupees of joint cost will be allocated to CBL. They are asking what is the completed cost or total cost assigned to each unit of CBL. So we have to calculate the total cost of producing the CBL product, and then we have to divide it by the number of units so that we will get the cost per unit. So let's see how to calculate it. Here the requirement is to allocate the joint cost using NRV basis. What is NRV? NRV is nothing but selling price minus selling cost. So here we have to calculate NRV for both MSB as well as we have to calculate the NRV. We have to calculate NRV for the CBL as well. So at what price the MSB can be sold? 60,000 units. Each unit can be sold at a price of $5. Because we are processing it further, we should not take 2 rupees, because 2 rupees is the selling price at the split off point. But here it is specifically mentioned in the question that MSB product, even though it can be sold at the split off point, we are processing it further for $1 lakh rupees, right? So product MSB can be sold at the 60,000 units can be sold at 3 lakh rupees, and the further processing cost is 1 lakh. Without incurring this 1 lakh, you cannot sell product MSB, right? You cannot process it further without incurring this 1 lakh. So this 1 lakh needs to be subtracted. So we get 2 lakh as the NRV for MSB. Similarly, NRV for CBL, we are going to sell only 80,000 units of CBL. Why? Because 10,000 units are unavoidably lost. 10,000 units is your normal loss. So 80,000 units can be sold at a price of $10. So the total sales of CBL will be 8 lakh minus the further processing cost is 2 lakh. So we get 6 lakh rupees. So total NRV is 8 lakh. 2 lakh from MSB and 6 lakh from CBL. So now the joint costs should be allocated to both the products MSB and CBL on the basis of the NRV that we have calculated. So the total NRV is, we have to calculate it for CBL, right? Only for the second product, not for the first product. Total NRV is 8 lakh. Out of this, 6 lakh is from CBL. And what is the joint cost? Joint cost given in the question is 3 lakh rupees into 3 lakh. So 6 lakh by 8 lakh into 3 lakh, we get 2 lakh 25,000. But this 2 lakh 25,000 is the total joint cost allocated to CBL product, which means out of 3 lakh rupees, 2 lakh 20,000 will be allocated to CBL and remaining 70,000 will be allocated to MSB. But they are asking us to calculate the cost per unit. So 2 lakh 25,000. How many units of CBL we have sold? 80,000 units we have sold. So 2 lakh 25,000 by 80,000. We get 2.8125. But we can see that the option 2.8125 is not there in the option, right? Why? Because they are not asking us to calculate the cost. They are not asking us to calculate the joint cost per unit. Instead, they are asking us to calculate the completed cost or total cost per unit. So what do we need to do? This 2.8125 is the joint cost per unit. How do we calculate the total cost per unit of CBL? So 2,25,000 is the joint cost. The allocation of joint cost is 2,25,000. On top of this, for producing product CBL, we have incurred another 2 lakh rupees. Product CBL is not marketable at the split off, but must be planned and sized at a cost of $2 lakh per production run. So further processing cost is 2 lakh rupees for CBL. So 2,25,000 plus further processing cost is equal to how much we get? 2 lakh. So the total cost of CBL is 4,25,000. 4,25,000 is the cost for 80,000 units. We need the cost for 1 unit. So how do we calculate the cost per unit? 4,25,000 is the cost for 80,000 units. Cost per unit will be 4,25,000 divided by 80,000. We get 5.3125. So option B is the right answer. So next question number 7 is also similar to question number 6. Same information is given. So from here till here, the information given in question number 6 and question number 7 are same. But let's look at the requirement of the question. If Sonimat Sawmill choose not to process the mine support braces beyond the split off point, the mine support braces contribution margin from joint milling process would be. What they are asking us, see, listen, from the joint process, we are producing two products. MSB, mine support braces, and CBL. So CBL is nothing but commercial building lumbers. So we are producing these two products from the joint process. Now here, CBL CBL cannot be sold at the split off point. It is mentioned in the question. Assume commercial building lumber is not marketable at the split off. So CBL has to be processed further. So it has to be processed further. But MSB can be sold at the split off point. You don't need to process it further. So it is completely at the discretion of the company. Like if they want to process MSB further, they can process it or they can sell it at the split off point itself. So if Sonimat Sawmill choose not to process MSB further, which means if they are not processing MSB further, it means that they are planning to sell MSB at the split off point itself. So if they are selling MSB at the split off point itself, what is going to be the impact on contribution margin? Whether it is going to be 150,000 higher or 50,000 higher, 1 lakh higher or 80,000 lower. That is what we need to calculate. So it's very simple. If we are not processing MSB further, what is the gain that we are going to get and what is the loss that we are going to face? So if you are not processing MSB further, you can sell MSB at what price? MSB can be sold at a price of $2 without processing. Without further processing, MSB can be sold at a price of $2 per unit. But if you are processing it further, MSB can be sold at a price of $5 per unit. So if you are not processing it further, you can sell it only at $2 per unit. So you are losing $3 per unit if you are not processing it further, right? So 60,000 units of MSB is produced and you are losing out $3 from per unit. If you are losing out $3 per unit if you are not processing it further. So you are losing out 1,80,000. So this is what you are not going to get. If you are not processing it further, you are going to lose out 1,80,000 rupees of sales. What is that you are going to gain? If you are not processing it further, you don't need to incur the further processing cost, right? What is the further processing cost for MSB? The further processing cost for MSB is $1 lakh. So you can save this $1 lakh. So you are going to save 1 lakh if you are not processing further. You are going to lose out 1,80,000 revenue if you are not processing it further. So your net cost is 80,000. So the contribution margin will be 80,000 lower if you are not processing the MSB product further. Question number 8. Killian Company manufactures 2 skincare lotions, liquid skin and silicone skin out of a joint process. So there are 2 products that are coming out of a joint process. One is liquid skin and the other one is silicone skin. The joint or common cost incurred are 4,20,000 for a standard production run that generates 1,80,000 gallons of liquid skin and 1,20,000 gallons of silicone skin. So 4,20,000 is the cost incurred for producing 180,000 gallons of liquid skin and 120,000 gallons of silicone skin. Liquid skin sells for $2.4 per gallon. Silicone skin sells for $3.9 per gallon. If additional processing cost beyond the split off point are $1.4 per gallon for liquid skin and $0.9 per gallon for silicone skin, the amount of joint cost of each production run allocated to silicone skin on NRV basis is how much? So very simple. So let's draw this. So out of the joint process, we are getting 2 products, liquid skin and silicone skin. How many units of liquid skin we are getting? We are getting 1,80,000 gallons of liquid skin and 1,20,000 gallons of silicone skin. Each unit of liquid skin can be sold at a price of $2.4 and silicone skin can be sold at a price of $3.9. So 2.4 per unit and silicone skin it is at $3.9 per unit. The requirement of the question is, what is the amount of joint cost that will be allocated to product silicone skin if the joint product costs are allocated on the basis of NRV, net realizable value. So how to calculate NRV? NRV is nothing but selling price minus the further processing cost or selling cost, right? So in this case, if LS is processed further, we have to incur a cost of $1.4 per gallon. So 2.4 is the price at which it can be sold without further processing. And if you are processing it further, you have to incur a cost of $1.4. So selling price is 2.4 minus further processing cost is 1.4. So NRV for liquid skin is equal to $1 per unit. And for silicone skin, the further processing cost is $0.9. So minus 0.9 per unit, we get $3 per unit is the NRV per unit for silicone skin. But we should calculate the total NRV. So what is the total NRV for liquid skin and total NRV for silicone skin? Liquid skin 1,80,000 into 1, we get same 1,80,000. Silicone skin 1,20,000 into 3, we get 3,60,000. So what is the total NRV? We get 5,40,000. 180 plus 360. Yes, it is 5,40,000. So 5,40,000 is the total NRV, out of which 1,80,000 is for product LS and 3,60,000 is for product SS, silicone skin. Now we have to calculate the amount of joint cost that will be allocated to product SS, right? Silicone skin. So out of total NRV of 5,40,000, 3,60,000 is from product silicone skin into the joint product cost is 4,20,000. So 360 by 540 we get 0.66666 into 4,20,000 we get close to 2,80,000. So here option A, sorry, option B, 2,80,000 is the right answer. Next question, question number 9. Killian Company manufactures 2 skincare lotions. Same data is given, LS and SS, out of a joint process. Joint cost is all joint process cost or common cost is also 4,20,000 for a standard production run that produces 180,000 units of LS and 120,000 units of SS. Liquid skin can be sold at a price of $2.4 per unit, and silicone skin can be sold at a price of $3.9 per unit. Assuming both the products are sold at the split off point, the amount of joint cost of each production, the amount of joint cost of each production run that would be allocated to liquid skin on a NRV basis is how much? So this question is comparatively an easier question when you compare it with question number 8. The data is same. Here also they are asking us the amount of joint cost that would be allocated to liquid skin on NRV basis. But the difference is in the previous question, both LS and SS are processed further. From here, we can see that if additional processing cost beyond split off point is given for product LS and for product SS, it is given. So product liquid skin and silicone skin were processed further in the 8th question. But here, the products are not processed further. So we are producing 2 products, LS and SS, 180,000 gallons of LS and 120,000 gallons of SS. What is the selling price? $2.4 for per unit for LS and $3.9 per unit for SS. We have the selling price, but nothing is mentioned about the further processing cost. So in such cases, we can assume it to be 0. So NRV is what? NRV is just equal to the sales value. So NRV is equal to sales because they have not mentioned anything about the further processing cost. So if further processing cost is equal to 0, then NRV is equal to sales. So the joint cost should be allocated on the basis of the sales value of both the products. So what is the sales value of LS? Your NRV is equal to sales. So NRV of LS is equal to 1,80,000 into 2.4. We get 4,32,000. And for SS, it is 1,20,000 into 3.9. We get 4,68,000. So what the total NRV will be 4,32,000 plus 4,68,000. We get 9 lakh rupees. So 9 lakh rupees is the total NRV. We have to calculate the amount of joint cost that is allocated to product LS, liquid skin. So 9 lakh is the total NRV, out of which 4,32,000 came from product LS into the joint cost is 4,20,000. So 4,32,000 divided by 9 lakh into 4,20,000 we get 2,01,600. So option B is the right answer. Question number 10. A company produces two products that incurs a joint cost of $50,000. That incurs a joint cost of $50,000. At the split off point, 5,000 units of product 1 and 15,000 units of product 2 are produced. So we are producing two products from the joint process, product 1 and 2. 5,000 units of product 1 and 15,000 units of product 2 are produced. 5,000, 15,000 product 2 and each product 1 can be sold at a price of $5 per unit and product 2 can be sold at a price of $3 per unit. So product 1 can be sold at a price of $2 per unit and product 1 can be sold at a price of $2 per unit and product 2 can be sold at a price of $3 per unit. These products are processed further. Product 1 incurs $25,000 of separable cost and it is then sold for $12 per unit, which means product 1 is not sold at the split off point, but it is processed further at a cost of $25,000 and the 5,000 units can be sold at a price of $12 per unit. Similarly, product 2 separable cost is $30,000 with the final selling price of $6 per unit. So product 2 is also not sold at the split off point. It is also further processed at a cost of $30,000 and 15,000 units will be sold at a price of $6 per unit. If the company uses constant gross profit method to allocate joint cost, the dollar amount of joint cost allocated to product 1 would be how much rupees. So here they are asking us to calculate the allocation of joint cost on using constant gross profit method. So let's see how to calculate the allocation of joint cost using constant gross profit method. So for this method, we have to follow a series of steps. So first, we have to calculate the total gross profit. How to calculate the gross profit? Gross profit is nothing but the total sales minus the cost, right? So here 5,000 units of product 1 can be sold at a price of $12 per unit because we are processing it further. Both product 1 and product 2 are processed further. So we should not take this $2 per unit and $3 per unit because these are the selling price at the split off point. Since these products are processed further, we have to take the selling price after the split off point, right? So 5,000 units of product 1 can be sold at the price of $12 per unit. So total sales of product 1 is 60,000. Similarly, for product 2, 50,000 units are sold at a price of $6 per unit. 50,000 into 6, we get $90,000. So what is the total sales? Total sales is equal to 1,50,000 rupees, right? So 1,50,000 is the sales from both product 1 as well as product 2. From this, we have to subtract the costs. So here 25,000 is the further processing cost for product 1 and 30,000 rupees is the further processing cost for product 2. So what is the total further processing cost we get? 55,000. So 55,000 needs to be subtracted from 1,50,000. In addition to that, we are incurring a joint cost of $50,000. It is mentioned in the question over here. A joint cost of $50,000 is incurred for producing both product 1 as well as product 2. So minus 50,000 minus 55. So from sales, when we subtract the total separable cost and the joint cost, we get a gross profit of 1,50,000 minus 55,000 minus 50,000, we get 45,000. So this 45,000 is the total gross profit for the company. Gross profit earned from both product 1 as well as product 2. So the first step is to calculate the gross profit. Second step, gross profit for each product. So 45,000 is the gross profit, and this 45,000 includes the profit from product 1 as well as the profit from product 2. So what is the gross profit for product 1 and what is the gross profit for product 2? So we have to calculate that. What is the total gross profit? 45,000. What is the total sales? 1,50,000. Out of this 1,55,000, 60,000 came from product 1, 90,000 came from product 2. So the gross profit should be apportioned between both the products based on the sales amount, right? So 45,000 into 60,000 divided by 1,50,000. So 45,000 into 60 by 150, we get 18,000. So 18,000 is the amount of profit that is allocated to product 1. And what is the profit allocated to product 2? 45,000 into 90 by 150. 90,000 by 1,50,000. So the remaining, we get remaining 27,000 rupees allocated to product 2. I hope it is clear. 45,000 is the profit, and this includes profit from product 1 and 2. So this 45,000 is nothing but 18,000 from product 1 and 27,000 from product 2. The gross profit should be apportioned on the basis of the total sales. Now, let me write it over here. We have to calculate the amount of joint cost allocated for product 1, right? So the requirement of the question is calculate the dollar amount of joint cost allocated to product 1. So how to calculate it? That is the third step. Listen. Third step, sales minus joint costs allocated minus separable costs. This will give us the gross profit. Now here we know the amount of sales from product 1, 60,000. Joint cost allocated, we don't know. So we can keep it as X. Separable costs for product 1 is given in the question, 25,000. We are incurring a 25,000 rupees of separable cost for producing product 1. Further processing cost is 25,000. So gross profit we already calculated. Total gross profit is 45,000. But the gross profit allocated to product 1 is only 18,000. Now solve it for X. So what is the value of X? So bring X to the other side and bring 18,000 to the other side. So we get 60,000 minus 18,000 minus 25,000. We get 17,000 rupees. So 17,000 rupees is the amount of joint cost allocated for product 1. So option C is the right answer. So for calculating the joint cost allocated for the products under gross profit method, we have to subtract sales minus separable cost minus gross profit. We will get the joint cost allocated because gross profit is nothing but sales minus joint cost allocated minus separable cost. We don't have the joint cost allocated alone. We have the information to calculate all the other 3 variables. So calculate sales, separable cost and gross profit. The balancing figure will be the joint cost allocated. So there are 3 steps that needs to be followed while solving the question using constant gross profit method. First step, calculate the total gross profit, which is sales minus separable cost minus joint cost. Second step, calculate the gross profit for each product. The gross profit should be apportioned on the basis of the total sales value. Here it is 60,000 and 90,000. The gross profit of 45,000 is apportioned between product 1 and 2 on the basis of the total sales value. Then step 3, calculate the joint cost allocated by subtracting gross profit and separable cost from the sales value. Question number 11. Tukaris company processes DO into two joint products, big and mini. So DO is further processed into two products. Big is one product and mini is the other product. Both are joint products. DO has purchased 1,000 gallons of drum for $2,000. So we purchased 1,000 gallons of product DO for $2,000. Now here, what is this 2,000 rupees? Before that, processing costs are $3,000 to process 1,000 gallons of DO into 800 gallons of big and 200 gallons of mini. So we are producing 800 gallons of big and 200 gallons of mini. And the processing cost for big and mini is $3,000. So $3,000 is incurred for processing big as well as mini from DO. Now here we have this 2,000 rupees, right? This 2,000 rupees is also the joint cost. This 3,000 rupees is not the only joint cost, but this 2,000 is also the joint cost. Why? Because this 2,000 rupees is nothing but the cost of purchasing DO, the cost of purchasing 1,000 gallons of DO. DO is further processed into big and mini, right? So this 2,000 rupees is also incurred for manufacturing big and mini. I hope it is clear. So the total joint cost is not only this 3,000, the total joint cost is 5,000, 3,000 plus 2,000. Now the selling price is $9 per gallon for big and $4 per gallon for mini. So each unit of big can be sold at a price of $9 and each unit of mini can be sold at a price of $4. Big can be processed further into 600 gallons of giant if $1,000 of additional processing costs are incurred. So product big can be further processed into a new product and that is known as giant. So product big can be processed into a new product, that is product giant. We are if the input is 800 gallons of big, we will get 600 gallons of giant. Remaining 200 gallons is lost in the process. And the further processing cost is $1,000. This $1,000 is incurred only for producing product giant. If net realizable value method were used to allocate cost to the joint products, the total cost of producing giant would be how much rupees? So here we have to allocate the common cost or the joint cost on the basis of NRV. So how to calculate NRV? NRV is nothing but selling price minus the further processing cost. So in this case, DO is processed into big and then big is further processed into giant. So DO is processed into big and big is further processed into giant and giant can be sold at the price of $17 per unit. It is given in the question over here, right? So what is the sales from product giant? The requirement is to calculate if NRV method were used to allocate joint product, the total cost, they are not asking us the joint cost allocated to giant. They are asking us to calculate the total cost of giant, right? So first let's calculate the NRV. Each unit of giant can be sold at a price of 17 per unit. So the total sales from giant will be 600 into 17, we get 10,200. Product mini is not further processed, so it is assumed that we can sell it at the split off point itself. So 200 into 4, we get 800 rupees. So product giant can be sold at a price of $17 and product mini can be sold at a price of $4 per unit. So total sales is 10,200 for giant and 800 for mini. So this is the total sales. From this, we have to subtract the selling cost or further processing cost. Further processing cost for giant is $1,000 because it is given in the question. 600 gallons of giant can be produced if $1,000 of additional processing costs are incurred. So from 10,200, if we subtract 1,000, we get an NRV of $9,200 and NRV. Here there is no further processing cost. It is zero for mini because we are not processing mini further. So it is 800. So what is the total NRV? Total NRV is equal to $10,000. They are asking us to calculate the total cost allocated for Giant, right? So first let's calculate the joint costs allocated for Giant. How much it is going to be? It should be allocated on the basis of NRV, right? The total NRV is 10,000. Out of this, 9,200 is the NRV from Giant. 9,200 into what is the joint cost? Joint cost is 3,000 plus 2,000 rupees. This 2,000 rupees is also a joint cost because it is incurred for producing, sorry, it is incurred for purchasing DO. DO is further processed into big and big is further processed into Giant and DO is also used for processing mini. So this 2,000 is also the common cost. So total common cost is 5,000 which includes 3,000 plus 2,000. So how much do we get? 9,200 by 10,000 into 5,000. We get 4,600 rupees. So 4,600 rupees is option A, which is the joint cost allocated for product Giant. The requirement is not to calculate the amount of joint cost allocated for product Giant. So option A is not the right answer. Option A is the right answer if they are asking us to calculate the the amount of joint cost allocated to Giant. If they are asking us to calculate the amount of joint cost allocated to Giant, then 4,600 is the right answer. But the requirement of the question is to calculate total cost of producing Giant. So 4,600 is the joint cost allocated. On top of this, plus there is also a further processing cost that is incurred. What is the further processing cost for product Giant? 1,000 rupees. To convert product big into product Giant, we have to incur $1,000. So 4,600 plus 1,000 we get $5,600. So option C is the right answer. So C is 5,600 is the total cost of producing Giant.